All right, good afternoon, everybody, and welcome to the September 2025 Director's Cut. Thank you, everyone, for joining us both in person and online. I am Richard Suggs. I am the Geology and USC Class 6 Program Manager for the Department of Mineral Resources, Oil and Gas Division, and I will be presenting in place of Director Anderson this afternoon. As always, before I get started, I'd like to thank the staff at the DMR for the great work they do and their continued dedication to the state of North Dakota. And as usual, I will present the Director's Cut, and then Justin Kringstad with the Pipeline Authority will come on to do his update. We'll return and both answer questions as we're able. I will note that the September Director's Cut information will present the production numbers for July of 2025. And with that, I'll get into the numbers. Jump a few slides real quick. All right, so I guess before I get going on the numbers, I just want to note that July's production is the first production month to go against the new 1.15 million barrel per day and $59 per barrel revenue forecast moving forward. July's production came in at 35,987,222 barrels this month, equating to just a little over 1.16 million barrels per day. This is up very slightly from last month, up 0.19% from the June numbers, but that is nearly 1% at 0.95% above the revenue forecast. Looking at the total barrels for each month, it might appear a little larger discrepancy, but again, June has 30 days, July has 31, and on a daily basis, it's slightly lower, or that it's just that very slight increase from June to July. Similarly, gas is up. July reported 109.1 BCF, which equates to 3.52 BCF per day. That's an increase of 1.91% from June to July. North Dakota County production, the blue bars on this chart are millions of barrels produced per county. So in this case, we have 11.5 million barrels coming from McKinsey, 8.3 coming from Williams, 7.7 from Dunn, Montreal having 6.2 and a million barrels coming out of Divide. I'll note the black line on this chart is the percentage of the statewide total. You can see McKinsey County here is accounting for about 32% of the state totals, and the top 5 producing counties make up 96.4% of the state's production. This is Baker Hughes rig data presented in a couple of different slides or a couple of different presentations. The chart at the top is rig count by state numbers, and the chart at the bottom is rig count by basin. The total U.S. rig count is down slightly at 533 rigs in the U.S. Onshore. Texas having 242 of those, accounting for 45.4% of the country's rigs. The number on this data indicates current rig count in North Dakota is 27. I will note that looks to be slightly decreased from the numbers we reported in August and July. Looking at our data available on our website, that number would be 32 active drill rigs, not counting sputter rigs. On a basin perspective, 29 of those rigs are in the Williston Basin, 2 of those are in Montana. 254 are committed to the Permian in Texas and New Mexico. And there's still a pretty healthy dry gas play in the Northeast U.S. with 31 rigs running. Looking at that data, just a little bit different rigs over time by state. The U.S. and Texas rig counts actually remained static August into September. Again, slight decrease was indicated in the North Dakota numbers. And looking at those same rig counts on a basin perspective, one slight decrease out of the Permian, losing 1 rig from August into September. Pricing activity levels as of when we grabbed these numbers yesterday, the current WTI oil price was $62.05 per barrel, and the current Henry Hub gas price was $2.90 per million BTU. The North Dakota market oil price had increased slightly up to $61.75 per barrel, and that is 4.7% above the revenue forecast at $59. Frac crew count did decrease slightly, is at 12 currently. Permits and completions. These numbers remain relatively stable. Might be a slight decrease in permits issued in August, reporting 90, with July at 99 and June at 97. Completions look to be slightly up, with August reporting 83, July at 77, and June at 65. The state continues to issue additional longer extended reach lateral permits. 3-mile and 4-mile permits are becoming more and more commonplace. And I will also note an additional 2 4-mile lateral completions have recently been reported. This chart was new last month. It's average cycle times. We're reporting 2 different kind of phases of development, with a spud to stimulation metric and a stimulation to first production metric. The blue line being the spud to stimulation, the orange being stimulation to first production. The intent here is that decreases in these lines would indicate operational efficiencies being gained by, pause one moment. All right, back to it. Decreases in these numbers would indicate operational efficiencies being achieved by the operators. Well count, total producing wells does appear to be at an all-time high of 19,547 wells as reported in July of 25. This is up 38 over last month, which would also appear to have been a record. On the positive side as well, the number of inactive wells is decreasing, went down another 80. We had an increase in inactive wells due to the low price environments in May and April, and those wells appear to be coming back online as anticipated. So completed footage over time, not much changes on this chart from month to month. We continue to add the additional completions that have been reported and the lateral lengths to that 2025 bucket on the right-hand side of this. Eventually, we anticipate that that would be similar to the 23 and 24, if not exceeding those numbers. Again, so lateral length over time. This chart depicts the percentage of wells completed as 2-mile or 3-mile, 2, 3, or 4-mile. They're all 3 on the chart. 2 miles being in blue, 3 miles being in orange, and the green line at the bottom being 4-mile lateral wells. Roughly, we look at this in a 70-30 ratio between the 2-mile and 3 miles. We do anticipate additional 4 miles as the permitted 4-mile wells begin to be drilled and completed. We'll see what the effect of the 4-mile completions has on these numbers. And on Fort Berthold, July oil production was 153,503 barrels. This is a slight decrease, 4.8% decrease. However, the rig count increased an additional rig this month for a total of 3 rigs currently running on Fort Berthold. And the total active permits also increased slightly up to 139. Gas capture after completions of some scheduled maintenance in June. Gas capture in July did rebound back up to 95.2%. And I think with that, I will hand it over to Justin Kringstad for his update.
Thank you, Rich. Good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We had quite a few questions roll in prior to the start, so I'm going to try as I'm going along. If there are some questions I can just tag right into some of my material, I will do that. Otherwise, when Rich and I come back here at the end, I'll try and hit any remaining questions that still exist. So with that, we'll get right moving along here with the production from our neighboring states. Very similar numbers from both eastern Montana, South Dakota, 2 active rigs, and that's eastern Montana piece of the basin, 0 rigs active on the South Dakota piece of the Williston Basin. When we look at changes month to month for both oil and gas, again, very little change on the oil side. Gas, a modest increase in those gas volumes month to month. And then what I really want to point out on this graphic is that GOR. That's another record, 3.03 MCF per barrel of oil. Again, that trend continuing that upward movement. That is something we expect to see consistent now for many more years to come. It will have ups and downs as new wells come online. A lot of the little month-to-month changes are just due to new wells coming online and some of that flush production, but underlying that base GOR continues to trend upward as expected. On the oil side, a few minor changes from what we were seeing. We were seeing some less market share on the pipeline side and more volumes getting onto the rail network. Again, the traditional pipeline routes shown in blue here, and then purple, that slight uptick that you're seeing from June to July, that is on the rail market share piece. When we look at volume-wise, somewhere in that ballpark, again, we don't have perfect numbers here, but around 180,000 barrels per day, up from that 120 to 140,000 barrels per day that we had kind of settled in at for quite some time. So there is a noticeable uptick. Those volumes, again, primarily going exclusively to the Pacific Northwest, that PAD 5 market share, that East Coast PAD 1 continues that downward trend, less and less significance for those barrels moving on the rail network out of North Dakota. When we look at pricing around the region, this was June. This is the latest the EIA had available. Taking a look at, again, PAD 5 having that highest priced market. So it makes sense that for those areas or those regions of the U.S. that cannot be reached by pipeline, Pacific Northwest being one of those, rail being the only option for those Bakken barrels to get to those light sweet refineries up in that marketplace. So that makes sense, high prices and rail being the only transportation method of getting that oil there. We look at what pricing is doing as of earlier today when these numbers are put together. Clearbrook still trading at a discount to WTI. That's one thing that first we're typically looking at to see how that Bakken barrel is competing in that PAD 2 Midwest complex. The Brent WTI spread largely unchanged month to month from that August report to this month here in September, and near identical of where the market's at in that WTI Houston pricing. We look at some more localized pricing here. This is in aggregate from our tax department of what an average discount is for those North Dakota barrels relative to WTI. That is the upper portion of this graphic. Improvement from June to July, $5.42. Having just gotten some of this data, I have not had a chance to dive real deep into why we saw the rebound in pricing. One thing I do want to dig into, again, I don't have anything concrete, but I do know that the Midwest PAD 2 refineries had very strong runs this summer, basically maxing out utilization near or even at sometimes above 100% utilization in those PAD 2 refineries. So that is one thing I do want to dig into, as well as what some of that PAD 2 refiner acquisition prices were doing relative to that benchmark. So those are a couple things that I will be diving into. Some of you on the call may beat me to it, but those are the things that I want to take a peek at. Switching gears now over to the wrapping up here. No major changes on those truck and rail movements in and outbound with Canada. So now switching gears to the natural gas side, a 1% improvement from June to July on the gas capture. No major changes in why that gas is being flared. Majority of the flaring volume still coming from wells that are connected to pipeline systems. It's just that those systems somewhere along that chain of custody, there's a bottleneck. And so whether it's just physical pipe capacity, compression, processing constraints, one of those is what's limiting the ability for all those molecules to make it to the marketplace. And so I would say, following on a very strong trend, now we've got almost a handful of months down near that 4% flaring. That is a very positive signal and really shows the efforts that I know a lot of these midstream companies, I see it behind the scenes, but to see it now in the numbers, the efforts that are being put forward to make sure that folks are moving as much gas from that wellhead to us as consumers. Again, positive news, the gathering systems, the new well connects keeping pace, actually slightly outpacing in July, new well connects relative to new wells producing gas. EIA is continuing with their bearish oil price outlook. This is the September numbers. August really got a very strong bearish revision. September largely unchanged, still forecasting mid 40s sometime next year for that WTI price point. The bottom right-hand side of this graphic, they're still anticipating very, very strong oversupply in the marketplace with production outpacing world consumption. So that is the primary driver for why they're seeing that negative pressure on the pricing. This is a graphic. I apologize, I didn't get a chance to update the base. We always talk about natural gas processing. One of the projects on here, unfortunately, for now is going to be removed out of that. That is that Hess Midstream Kappa plant. Late last week, they announced that they were going to be pulling that off their current schedule for capital build-out. So this will get revised, and we'll continue working towards addressing the gas processing needs here within the region. And now getting on to some of the residue, the natural gas transmission systems. We always start with the Northern Border Pipeline, which is the gold system for those watching here. That is our major export system leaving the Williston Basin. Market share on that system been hovering in recent days right around mid 80% market share, Bakken relative to that 15% Canadian market share coming down. And BTU, this is one of the tailwinds. So if anybody's been following any of my presentations as of late, I've tried to categorize what some of the tailwinds that are helping the natural gas situation here in North Dakota. This low BTU is one of them. It's roughly 100,000 decatherms per day or 100 million cubic feet per day of gas that's not hitting the residue pipes because gas processors within the region are making the conscious decision to pull ethane out, keep it out of the residue pipes, leaving more space for Bakken gas and other molecules to make their way into that marketplace. There's some questions, I'll address them now, relative to the Bakken East pipeline system, as well as the intensity infrastructure system. So again, as a reminder, the Industrial Commission through the Pipeline Authority is going to move forward with the Bakken East project. We are just starting those conversations with the company. There are a lot of shippers and potential customers at the table right now with the company. So there's a lot of work yet to be done, but those conversations have started. Nothing to really announce at this point. It's likely many weeks, if not months, away from any formal decisions and next steps here on our side as we just continue to work behind the scenes with the company as they continue to fine-tune this project. What you're seeing up in this graphic, the 36, the 30, and the 20-inch pipe segments. Again, with all of the, almost weekly, there are new projects at least coming to the conversation about moving in and building off of this system or building on this system. So there's constant iterations. So it's an exciting time. I know the company's working very hard to get that done. Still working very diligently with landowners along that route for survey permissions and access onto their property. The intensity, one of the questions on here. So next steps for both projects. I don't have anything formal from an update on the intensity side. I know that commercially they still have the opportunity to work in the marketplace, continue to work with existing customers or new, or continue to work towards maybe some type of joint arrangement with the WBI team. But that is something that will be up to these companies. That's not something I'm injecting myself in the middle of. One update on Northern Border, we talked about this last month. The upgrade projects that are part of the Bison Express expansion, those efforts have been slightly delayed and extended. This compressor upgrades at Manning and Glenolan were scheduled to be done this month in September. As you'll see on that schedule, that has been kicked back a couple of weeks here as delays. We had very high moisture hitting North Dakota in recent weeks, and so it's been challenging for everyone in the construction industry with very, very high amounts of rain here as of late. So, but everything's still on track for a March in service on that Bison Express expansion. That'll bring another 300 million cubic feet of capacity out of the Williston Basin as it moves down towards the Rocky Mountains. And so with that, I will answer one question here while I've got this map, because this will help. So what do we expect market share on the Northern Border pipeline system? This will ebb and flow. And how do we expect that going forward? As the Bison Express project comes on into service in March of next year, I expect those market shares that we're seeing on Northern Border temporarily, it's likely that we'll see some shift of market share onto that Bison system. Again, all models are suggesting that that's just temporary. As Bakken natural gas production continues to ramp up, we're going to see Northern Border, that market share versus Canadian, ramp back up as well in these next several years. So some ebbs and flows in the near term as Bison Express comes on into service, but long term, still forecasting congestion on the Northern Border system, and then looking towards the Bakken East project and all these other in-state and outbound egress pipes to address the market share constraint as we hit that 2030 timeframe. And no real news to provide right now on the NGL side. So we will pause there. Rich, I'll have him slide over and we can start diving into some of these other questions. I know there's still a few here on my list to address, but I'll let Marina see if there's any from online first here, or Dave in the room. We'll go to you.
Well, just a little follow-up on where have a lot of the contacts come for the use of the gas and new pipeline? Is that industrial users? Is it cities? Is it data centers? What do you know?
Yes. Yep. So the question in the room was, yeah. So who are the new folks, coming to the table? It's largely for the molecule. It's getting into the power grid, but that power, the new folks at the table are typically data related. Most of the regional power players have already been at the table, trying to understand their needs. And so we will continue to talk and educate and work with those new players looking at North Dakota, looking at this system, see how it fits into their portfolio. There's a lot of good information last week at that Farm Council annual meeting, one of the data providers on some of the advantages that North Dakota has. I would say very strong advantages, and folks are realizing that, and they're still coming to the table.
I asked the question because Basin's building that fairly large, probably the largest plant,
Yes.
power plant in North Dakota, which is natural gas.
Yep.
We did have a couple of questions come in, I guess, from in email before the director's cut here. And despite some of the scheduling conflicts and staff availability issues that led to me presenting this director's cut today in the first place, I was able to get some responses from Nathan on a couple of these questions. So I'll just read the question and some of the response that I got from Nathan. So the first question was, with ExxonMobil divesting Bakken acreage and Chevron scaling back drilling activity in the basin, what are the potential long-term implications for Bakken's production outlook? And so the Exxon acreage that was divested was purchased by Cord as reported in the media, and Cord remains an active operator in the state. At this time, we don't have knowledge of Cord's development plans for that acreage, but Nathan was able to speak with Cord's senior leadership last week, and they reiterated their excitement about the North Dakota position and the they expect to remain consistent in their capital spend and development plan in North Dakota. Also, as you've seen, Chevron plans to drop from 4 rigs to 3 in North Dakota as part of their ongoing plans. In discussions from Chevron North Dakota's leadership, Chevron recently achieved their milestone of growing the Bakken production to greater than 200,000 barrels of oil produced per day, reaching the longstanding goal set by Hess originally. This milestone was reached ahead of schedule, driven by technical and innovation efficiencies gained from improved cycle times and longer lateral wells. Their 3-rig program now delivers comparable output to a 4-rig program from just a few years ago, allowing Chevron to sustain production levels while optimizing the use of existing infrastructure. While we also expect Exxon to pick up a second rig over the next few weeks. Therefore, the changes in North Dakota rig count remain neutral between these two companies. The second question that was asked, what is happening with exploration of Williston's other stacked zones, i.e. zones other than the Middle Bakken? Continental Resources drilled a 2-mile well in the Winnipeg Formation in Divide County. What other zones are being explored by industry? And again, I got response directly from Nathan here. So good question. I would say we are aware of permits in the Red River and Madison formations. Recently, an operator drilled a couple of Red River wells in the southwest part of the state. There's interest in the Madison in the southwest corner of the state, but not any significant activity yet. We're hearing some interest from operators in a few deeper exploration type wells, but don't have any certainty on this yet either. We've recently heard of interest in infill development in the Three Forks as well. We also continue to see strong interest in infilling the Bakken with 4-mile laterals and a rise in U-shaped style proposals, recovering reserves in parcels that aren't available for 2 or 3 or 4-mile laterals. In short, we are hearing of lots of interest in other formations, but limited activity as of recently. We do want to note that the legislature recently passed a bill that provided a tax incentive for all wells drilled outside of the Bakken and Three Forks Formation, first 300,000 barrels or 36 months. And the legislature also passed another bill that was aimed at promoting technology and innovation throughout the development of what we call the Development Incentive Well Program. Similar to non-Bakken tax incentive, this bill provides a tax break for the first 250,000 barrels or 36 months of production to companies that invest in projects within any formation that utilizes new or recent technology meant to further increase reserves and boost production from existing formations on new wells. What's online? There might be a number of other questions that have popped in. I think there are right now with limited resources. We'll try to respond to those questions via email in the next few days.
Unless Dave, you have any more for me, I'll answer some of these ones that did come in here. So I've knocked out a couple of them already. Bison Express completion, March 2026. That is consistent still. Bakken gas flows to the Midwest versus the Rockies. What are the market shares? So my rough calculations, back of the envelope here, we got about 5 to 10% of North Dakota's natural gas production that stays locally within, I would call, kind of the North Dakota, Eastern Montana region. The rest of that being moved out of state and then largely to the Chicago Midwest marketplace, roughly that 80 to 85% going down northern border, the Alliance pipeline, and then very limited flow on the grassland system down to that Cheyenne marketplace to the Rockies. So maybe about 5% to the Rockies. And then as Bison Express comes online, first part of next year, obviously those numbers will shift greatly as we see higher volumes of Bakken gas moving into the Rockies marketplace. There was a question about in the past, these director's cuts. I know Lindholm's had pricing for the Watford City natural gas. Question here was whether or not that's still something that's available. Now, since that time, I know Lynn was working hard to estimate and provide reliable pricing info. Since that time, ICE has added a new Bakken natural gas pricing point into their system. It's a subscription-based platform. I don't have a subscription to it. I'm not aware that the state does, but those in the marketplace, you can look at that ICE pricing system to find that Williston Basin Bakken price point. So no, I don't anticipate us providing any additional pricing details there. And then last question here, Grassland South, that's the WBI pipe that I referenced earlier from Manning, North Dakota, down into the Cheyenne marketplace. Has that been flowing near capacity? Yes. That system is largely full and providing as much egress as it can out of the basin. So with that, any other questions, Rena? Well, we'll wrap it up there for this month. Thank you again, everyone. We'll see you next month.
Thank you.